Happy New Year, Peter.
Happy New Year, Dale. Can you hear me okay?
Yeah, I got you now, Peter.
Perfect.
I hope this is a...
Peter.
Hi, Steve. How you doing?
Good. How have you been?
Yeah, brilliant. Thanks. Okay. Yeah, we're into the new year. My God. And it's been pretty hectic so far, hasn't it?
Yeah, it's eventful. So, may we live in interesting times. So, Peter, you remember how to share the screen here with that green box on Zoom?
Yeah.
And, we were just talking about Bitcoin, and I remember I remember a couple of entries that you gave, and the first one was in January, I think was it 2019, when we broke from 18,000 to 3. You saw that bottom, and then we had rallied down up to 10 or so, and you said there could be a pullback to 7, and there was. And you have tremendous upside targets. But let's start here with S&Ps.
Yeah, we can come back to Bitcoin a bit later if you like.
We could. Okay, so we had that big break on Monday, and yesterday in the S&Ps we took out that high by one handle. Kind of looked like a stop hunt to me.
Yeah.
And wondering what your count is saying here. Are we close to some type of correction in the S&P, and the dollar also very one-sided at this point with bearishness, and it looks like it's trying to come out of here.
Yeah, that's right. I mean, the S&P, I think that this S&P sort of pattern that we've looked at for a little while now is approaching its completion. I mean, there's this very distinct diagonal, which you see here. I mean, in Elliott terms, a diagonal is either at the sort of beginning of a trend or the end. This is an ending type diagonal. It comes as the fifth wave within the upswing from October. And what's very particular about an ending type diagonal is that the composition or the subdivision of the impulse waves, that's basically 1, 3, and 5. So here's wave 1, here's 3 and 5 up here. These are normally zigzags, or they're multiples, in other words, doubles or triples. And we've seen a sort of a zigzag up here. We've seen a nice zigzag here. Dimensionally, they look pretty good. If you can see 61.8 phi ratios in both, which is this little red symbol here. And to some extent, we get that in here. I was a bit surprised, I must admit, to see us take out Monday's high yesterday. I think that's morphed this single zigzag into a double, but I wouldn't expect it to last too long up here, really. And we should be getting to a point where we get a reversal within the next day or so, and another setup to the downside. So I don't think this has got a large amount of upside potential left in it. It looks very much to me as if it's tilting over. And overall, we see that mirrored in things like the dollar, sort of making a formative low. Could trade a little bit lower, but it's not.
What kind of magnitude correction should a high develop here, Peter, in the next couple of days? Are you looking for 10%, 5%?
I think we can see a 20% drop.
Okay.
I'm just trying to change my page, but unfortunately the Zoom icons are covering up my page change.
Maybe you could lift those Zoom
I'm just
icons.
trying to see if I can get rid of it. If it's just a mouse over or not. No, I thought this was a mouse over. I thought it disappeared, but
okay, so
it usually it's moused over, but
Steve, are you still here? Okay. Well, the other option is to do a new screen share, so you could stop sharing and then reshare something else. But there's always a new. Click the Zoom icons and slide out of the way is what Chris M is saying.
Let's have a look. Slide out.
Slide it out.
Okay.
Does that work?
I think probably it will. I mean, it covers up the chart. Does it cover up my chart when you view it or not?
That toolbar moves, he says. Click the Zoom icons. Yeah. No,
Okay,
I'm still seeing the S&P chart, the original chart right here.
okay, I've taken this out now, so that's okay. Let me just, I think I've done it, so let's try it. So let's look at the larger picture. This is what it looks like from the March low down here. Can you see
Yeah,
that?
it's up there now.
Yeah, we've got 5 waves up into early September, and that's the same for the Dow as well. We dropped down in a very tiny 3-wave pattern. You know, I mean, we've said this before, but this 3-wave decline, which bottoms out in late September, is really too small to be a second wave correction. If this is a big first wave up into the early September high, this is way too small. You know, 8 times out of 10, you're going to fall back to wave 4 preceding. It's very, very rare that you'd fall short of that.
Yeah.
There can be situations which you do get shorter term movements, but judging basis what the sentiment numbers are like up here, you know, and they're pretty big numbers in terms of bullish sentiment, I think we're okay on the right track to expect this whole area here to be an expanding flat pattern, you know, this entire thing. And so we've got wave A down as part of the expanding flat, and then the second sequence of the pattern generally moves into a slightly more modest higher high. And we can normally measure that accordingly. If we, for example, just take some fib price ratios, and if we put the standard 3 sets of subliminal ratios in 14, 23, 38, we just simply extend wave A like this. And these are your set targets. So we're getting towards the 38% area here. And that should be the precept to get wave C declines. Now, wave C should be 5 waves to complete the expanding flat. And again, we extend this by those ratios. In this case, we've extended by 61.8. And that pulls us back to about 29.80. Well, that's a good 20% drop, you see.
Yeah.
And that would get us then.
NASDAQ did not make a new high yesterday, Peter, with the S&Ps being able to eke one out. And I recall from interviewing you, if you're looking for 20% in the S&Ps, you're usually looking for a larger magnitude decline in NASDAQ. Is that correct?
Yeah, the beta is higher. So basically, the downside targets here for the same pattern. So it's an expanding flat pattern, A down. B in this case is a double zigzag, whereas the S&P is a single zigzag. And again, we extend. This case, we've extended by 23%. That's all. And we've got these two numbers converging up here. And you can see it's hit that on New Year's Day and or the first day of trading of New Year. And we dropped back. And we haven't made a higher high. And I don't think we will. I don't think we will make a higher high. I think this could trade up through the session today, a little bit like this.
Yeah.
And I think if it's not tomorrow, Friday, it'll be Monday. And maybe sometimes we get a bit of exogenous news flow that maybe trigger a reversal signature, or perhaps something, we just get illiquidity coming through, the markets start to profit take, or insider selling comes through, and there's no news at all. I mean, we won't know for sure. But what I am fairly certain about is that we've correctly designated this as a double zigzag. And I think that progress, I mean, if you look at basically that sell-off that we saw the day before yesterday down here, it's basically touched the early September high. I mean, that means that there's been no net gain in the NASDAQ, since
for
September.
A month. Oh, yeah, a couple months. Okay.
Well, since early September.
Oh, so you're right. Yeah.
For 3 months. I mean, if you're a portfolio manager, you're not seeing much gains there, which I think is to some extent why we're getting rotation in the small caps. Like the Russell has done very well, and
also, Peter, before the high that we had in August, trying to short it, it was still pretty much a one-way market, and then in September, if your timing was good, even though the trend remained up, there were plenty of scalps that worked for you on the short side, which was a different character of the market in the last 3 months and going into that September where we really just were melting up with, hardly any pullback. So, I was actually able to come out with some nice bear trades over the last few months and still be wrong about long-term direction.
Yeah,
Is that kind of a market tell that if you're against a trend,
and still
and
making
you're
money.
getting right, and instead of getting run over 10 minutes after you enter the trade?
No, I think that's a good point.
Yeah,
I mean, don't forget that if you're in a corrective format, you'll get these, these big sweeps of corrections, which retrace quite a big proportion of where you've come from. So,
right.
for example, here you can
Yeah,
see down here, this was quite a big correction. Then we
right.
gain, and you get another jerk, and
Yeah,
this is very symptomatic of this type of function. So yeah, I think that defines a very, very two different levels here. Here you've got a roaring bull market, and here you've got a B wave of a correction. And I think that's why you did, pretty well on
okay.
your P&L,
Yeah.
irrespective of whether or
It,
not you anticipated this or at the time or
that it
not.
was going to get to achieve
Yeah.
those levels. So I'm assuming that if we're going to get 20% correction, I've been saying for a while that a natural battleground for the dollar to return to would be 95.50, 96 was where the dollar really began to accelerate to the downside.
Mm.
You want to move to the dollar, or
Yeah, I mean,
the metals have been pretty tricky too. So go ahead.
well, let's have a look at the dollar, as you mentioned it, because this is a new dollar cycle which I updated a couple of days ago, and we're putting this into our current reports, and
Okay.
this basically, I think it's been pretty good this cycle. It's got a few lumps and bumps in it, but I mean, we never use cycles for an exact day for a reversal. This is a
Right.
composite. Basically, what the red cycle projection line is supposed to do is to show you approximate timing and direction, not amplitude, but direction.
Right.
So amplitude, we're using fib price ratios to measure the wave counts and the wave sequences. But this is just basically then to show you direction. But what it's doing now is bottoming in January, around this time of the month. And it's basically moving up for the rest of the year. Well, pretty much so. I don't know whether it will continue to trade up like that, because I consider the resulting upswing for the dollar index to be simply a correction to the March decline, which is a 5-wave sequence. Well, let's have a look at that, and then we can check on the amplitudes. You mentioned 95 something, which I think is pretty much right. This is my idea, up to 95.30. So I think you and I are on the same page with that.
Okay. All
Um,
right.
the main reason for the upswing is really the fact that we've got a completed 5-wave sequence down here. 1, 2, 3. This is a nice channel for 3. You can pretty much put a channel in there, and then we have 4 and 5 coming down. And yeah, I mentioned I'm not sure if we've bottomed just yet. I mean, it could still drift back a little bit, but if we have a more imminent top forming in the S&P and some of the others, I think this probably may put in a base. It was at 89.21 yesterday or the day before, and
Yeah.
it could be, I mean, from a wave pattern perspective, whether you count the 5th wave starting from here or here, it's pretty much done. And you can fine tune a little bit if you go intra-hourly. But otherwise, this is generally bottoming out, and we should see a return back to wave 4 preceding. In this case, it's about a 50% retracement of the entire move from March.
Okay.
So, yeah, I think that this is almost a done deal for me. And, I quite like the Canadian dollar as well. I was looking at that this morning with a client.
And you were real right about the decline of USD CAD. You've been bearish a dollar, so this is the first time that you've kind of looked for a decent type of correction in the dollar for a while. I mean, we had that thing in September that bounced, but so here, okay, nice picture.
Yes.
Okay.
Yeah, I mean, actually, it's not too dissimilar to the dollar index if you look at it like that. But
Yeah.
it's got its own idiosyncrasies and different wave patterns, and that makes it really useful to make a direct comparison. So
Okay.
this is also a 5-wave pattern down, and I particularly like one of our discoveries many years ago was that a useful guide when you've had a first wave develop is to extend that by 1618 to derive the fifth terminal fifth, and that's pretty much where we've touched this week. We had a target that measures at 126.33 and it got to 126.
Don't give away all your tricks, man.
No, I want everybody to learn about this. I mean,
all right, I'm kidding you.
No, I mean it's good. I mean, no, we're good with that. Don't worry.
Sell your secrets for $999.99. All right.
But yeah, so I think that's a good confirmation. It looks similar to the Aussie dollar, but in inverted.
Inverse,
And
yeah.
So I think the Aussie dollar. Have I got it here? That's the S&P and the Aussie dollar. Here's the Aussie dollar. So it's pretty much
close.
Inverted.
Yeah.
Here's the March. I mean, this looks a bit like the Russell, actually.
Yeah.
The Russell. So you've got 5-wave patterns up. Some of the emerging markets have done very well. India looks like a big 5-wave pattern that's completing. I named that one in particular because it's really been outperforming.
Yeah, the ruble, you were right about the ruble. It came down. Did the real, you were also talking about that.
Yeah, all of these emerging market currencies, very, very important, really. Where's the ruble? I mean, you can have a quick look at that. Let's look at the bigger picture. Yeah, here we go. I mean, I think that we're going to see massive appreciation in these currencies over the next few years. So you can get exposure to these types of companies that will outperform, even if you can't trade them in local currency terms. You can buy some of the commodity stocks in Russia.
Petrobras was a great call you made on the last interview.
Oh yeah, that's gone up a lot, isn't it?
Yeah, it has with oil.
That's
and
right.
Oil's been a little bit tricky for people. It's finally, a lot of people still are scarred with bearishness from when it went negative, and I've been trying the short side with not a lot of success. Are we getting to a point where if the S&Ps are going to decline, there should be some type of pullback in energy, because it's just getting back to where it was around the COVID crash, where other markets have made higher highs. So
yeah, I think that this is Brent actually, and it's a bit better to look at because you haven't got $6.50 on here, which is like Brent. It's a bit extreme.
That's right. It screws up the charts. Yeah,
it does a bit, and even this is a bit tricky because we've had a nice 5-wave advance into August, end of August here. We've had a nice clean 3-wave drop.
Last time we were on, you said we could pull back to 33. That was the last bearish trade, and then we moonshotted up here. So you're thinking we're close here. So what a great time to have you on, Peter, because it seems like we're near multiple inflection points now.
Yeah, that's right. I mean, this chart that you see in the background here is the continuation chart. But I like to, for oil in particular, because there's no spot market that really is available, where you get the rollovers, idiosyncrasies and gaps and things. It's best to look at the outright contracts comparison. This is the March 21 contract for Brent. And I think this pattern looks a bit like a zigzag, in which case, this is wave A. I was playing around with this this morning. So this would be basically wave A, and this is B, like this. And you've got wave C coming in now. So it can do a little squeeze up a little bit more. That's 56.86. It's probably worth writing that down if you're trading oil and waiting to see if we get some response. I think we probably will, almost certainly will. And that would bring us quite a tidy correction down to the downside. So that's certainly.
So the metals have been kind of tricky, except there have been some clean formations for bullishness. So if we get a dollar rally, we get risk off. What's your path forward with gold and silver into the next?
Oh, well, I was just flipping to copper briefly.
Oh, okay, yeah, because you know what? I remember I was bearish short. For you called that there's going to be one more washout and then a moonshot, and you are certainly right. A lot of people have been trying to short copper all the way up here because they were bearish on the economy. But now you're saying we're, approaching the top up here now.
Yeah, there's a nice 5-wave pattern up from the March low, and interestingly enough, that March low never broke below the 2016 low, which was back here, and it was a close call, but it's a deep second wave correction. And since then, we've been moving up in 5 waves, and this is getting towards now completion. I think you'll probably see that top out the next day or two, actually.
Okay.
And we'll then start to change to risk off, and then we can start looking at a nice correction back to wave 4 proceeding. As for gold and for gold and silver, yeah, I'm a bit bearish for gold and silver. I have been since August, by the way.
I missed this last rally too.
I didn't.
Okay, good.
But I have to say that I shorted a couple of days ago gold and silver. I've still got my silver short, but I closed out gold when it dropped yesterday.
Yeah.
I got a bit overextended on my positioning, so I was either going to close out silver or gold, but I want to go back in, and the simple reason is that there's two things. One is that let me just find my chart here. Okay.
That's gold.
This is gold.
Okay.
Okay. And when we go back to August, we have this very clean zigzag down here. That's dead easy to see. You've got a nice symmetrical triangle. We come up in 3 waves. This is X. We have another 3-wave drop. But this is where it gets a bit more complicated because, and this is where sometimes proportion helps. I don't know if that is a secondary zigzag, and we've got a third down to 1660, or whether or not gold at one stage I thought might squeeze up to 1980 and then drop down to 1660.
Okay.
But I believe that the entire decline from August is incomplete, and main reason for that is that we're trying to correct the larger picture all the way back here from August 1160. And this movement down to here into the end November low is not really deep enough to represent a full correction of this entire uptrend. It's way too small. It's a bit like the S&P, which we started with, where the initial downswing in September is too small to really satisfy a correction back to wave 4 proceeding. We're definitely going to need some more. And the other thing that's a bit of a tip-off with gold is the cycle. I'm just trying to see if I can find that here, but I think I think this is my gold cycle. Yeah, this is my daily gold cycle, and you can see that it had a bit of end November was the low there. You can see we've been flipping up since, so it did show that there was going to be a bit of a flip, but it's going to start as soon as we get into February. We're going to start dropping down again here.
Okay.
And don't forget, this is not meant to show amplitude. It's just timing and direction. But I think that if we overlay that to what we're seeing in the gold price from an Elliott perspective, we're going to get down to these numbers. I think that this is going to be a bit of a washout for gold still. So I'm a bit bearish at these price levels.
Why don't we wrap it with yields? A lot of people are getting bulled up on yields now that we cracked 1%. I think I took a look at your work, and you're looking for one more dip in yields after this move up in, the 10-year towards, over 1 BIP.
That's right. Yeah, I tend to think that the yield. This is the 10-year Treasury yield.
Okay.
So we're trading at 107 today, but what I don't like about this is that, first of all, what do you think 10-year yields will do if we suddenly go risk off? I mean, if we go risk off and we start getting if I'm right and we get a 20% correction in the S&P, what do you think yields are going to do? Are they going to go up or are they going to go down?
Yeah, down.
Yeah, they have to go down.
Yeah.
I mean, And the
Well,
other
they don't
thing
have
is,
to be. There will be a time, don't you think, where we could have risk off, and the problem is sharply higher yields, but we're not in that situation yet.
well, actually, why, under what condition do you think that could happen? Where risk off comes in and yields still go up? In what way?
The Dixie going to 50, and rates
Ah,
going up as
ah,
people avoid our debt,
yeah.
not because of economic growth, but because of a currency crisis.
Yeah, okay. Yeah, granted. I think if we get our long-term dollar call right,
Yeah,
and we're moving down rapidly in the next few years, then yes. Well, I think that's true. Here, yeah, you're right. We're in a slightly different situation. This movement up from 60 basis points worries me a little bit because I don't know really what that is. There's too much overlap. It's
yeah,
either an overlapping diagonal. It could be a leading or an ending type, really. In that case, don't know. Could it sort of accelerate a lot higher at the moment? I don't think so. Not with the backdrop if we're looking at risk off. I mean, if this does to accelerate higher at the moment, then we're wrong in the dollar, we're wrong in the S&P, we're wrong in the Nikkei, we're wrong in the
right.
Nasdaq, we're wrong in so many different asset
So
classes. We're wrong in the Canadian
so we
dollar.
may as well go to Bitcoin. Is Bitcoin going to be, really has taken advantage of dollar weakness? I really can't wrap my head around blockchain, but I mean the move's been unbelievable. I know it didn't surprise you, but if we're going to get a shakeout of risk, um, is Bitcoin going to be succumb to it? And there's our
Well,
answer.
yeah, I mean, it's done phenomenally well since September.
Yeah,
Don't forget that it coincided with the lows in March. So during
right.
the risk off phase that we had and the collapse in March, it came down
Yeah,
here. So it sort
right.
of synchronized with the main sort of the main asset classes that we saw before. And the big question with this, I'm using log scale because otherwise it doesn't make sense to look at
Yeah,
Bitcoin in linear scale. Otherwise, if you're using channels and things, it just doesn't make sense. You've got to use log scale to really understand where the long-term trends are coming from and the measurements of them. I think we're going to get to at least 250,000 in the longer term. Then the question is
don't
what
you still have your
sequence?
100,000 target long term?
I got even, yeah. I mean, I think we've gone.
I
I think
remember
we can
seeing
probably
that a
do.
year ago or 2 years ago, your
Yeah,
long-term
I mean,
count.
I've revised it since to take into account the fifth wave, which was missing in the report before because we had a bit of a scale problem.
Okay.
And I think this is what it looks like now: 250,000 eventually.
Wow.
Um, this data we're putting in by hand because we're doing a bit of a cheat to ensure that the scaling works because the software doesn't allow manual scaling. So we're putting this in manually, so it's not got the latest price action here. But basically, I think this is the correct wave count. We're going going phenomenal. I think we get to 250,000. What I'm doing at the moment is I'm trying to see if we could do an alternate count here. There's two things. First of all, if we go risk off, a bit like the 10-year treasury yields, if we go risk off, what do you think Bitcoin will do? I think we're going to get a bit of, we're going to go through a
Liquidation.
correction.
Yeah.
And the question is, how far does it go down? But that would depend on what sequence this is in. At first, I tried to overlay this with the Russell in as much that the Russell, the Nikkei, the Indian market, they all look the same. 5 waves up from March, coming into a peak. This is a fifth wave extension. But if this is replacing, this area here is replacing a first wave, and this is a second. Normally, 80% of the time, third waves are longest in the sequence of an impulse wave.
Mm-hmm.
And if we just measure wave 1, assuming that we have an alternate count here where this movement up from the March, here is wave 1 like this, and we take this movement, well, we're getting a little bit longer, but we should be doing something like minimum 138.2. Well, that will take us up to 49,000.
Yeah.
So if this doesn't stop and put the brakes on right now, I think that we would then change this count to 1, 2, 3, and we'll get to maybe 49,000 thereof, and then we'll have a dip, a fairly strong dip, but as a fourth wave. and that dip will probably, you know, bring us back to that. Do you remember this first day of trading this year?
Yeah.
That traded down 19.5% in one day.
Yeah.
But of course, if you go up to sort of 49,000 and then get a drop down to those numbers, it's going to be percentage-wise a bit of a killer if you're leveraged.
Yeah. Well, you know, Peter, if I put together everything that we've talked about today, it sounds like any that you should start right now, putting your shopping list together, whether it's stocks, precious metals, currencies you want to be long term, crypto, really across the board, that we're going to, you know, have these markets come in, and that after the dollar rally is over, up around those levels and starts to head down, you could be long the world.
Yeah, I think if you have the ability to really take into account, we call this next phase the inflation pot, because you know, we are going to see rising inflation down the road, not in this first quarter of this year, because we've got to get this correction out of the way first. But after that, I think the Fed are going to be pretty embarrassed, because, you know, here they are sitting on their seats with you know, looking down the pipe with no inflation, and thinking that even if inflation comes around, they're not going to be active in changing their current policies for obvious reasons. But I think that's going to be a repeat of the 70s. I think that we're going to see inflation get out of hand from maybe, you know, at least from the middle point of this year onwards. And I think that's going to send this. I think it's going to pull the dollar down dramatically, and we're going to see what I call an inflation pop over the next several years, and you know, dollar declining rapidly, and these emerging market currencies should do very well. So if you can get exposure in some way to emerging market currencies, you know, we talked about SID and some of the Brazilian stocks that you can buy on dips. Don't buy them now. Wait for the dips to come, because if you didn't buy them already, it's a bit late. You might get hammered if you bought them now over the next few months. But you know, buy it. You know, take a look in March, April time, and then take a look and see if you've got satisfactory corrections. You can go in then and start to unleverage and put them in. I mean, these are amazing trades, and actually you don't need to be leveraged in them. They will still give you huge multiple returns, and that's the great thing. You know, you're not going to be stressed out if it goes against you a little bit, because you're unleveraged, and you'll still get the capital gain, you know, with the currency too.
Where will Newmont pull back to? I know that's your bellwether, and we'll wrap it with that.
Okay, well,
if you're right about gold going to 1650, you know, your bellwether, you have sharply higher long-term targets. I know in Newmont, maybe we pull back to the low 50s.
Let's have a look. I actually haven't.
You haven't looked at Newmont?
Let's have a quick look. Yeah, well, we were looking for a bit of a pullback still, and
45.
Probably hasn't done quite as much as it should do yet. You know, it probably needs
they've been
to trade down a bit more.
underperforming recently, the shares, compared to the bullion.
Yeah, they needs to drop back a little. But I mean, the long-term picture is still very bullish. I mean, we're looking at 160. So at some point we need to sort of get.
I'd love to own it down there around 40. So Peter, another great presentation. Glad that I have you on this beginning of the year week, so we have some things to consider. So for people to keep in touch with you every day and what you're thinking, instead of, you know, hearing you once every 3 months or so on F.A.C.E, how they go about it.
Well, thanks, Dale. Yeah, I mean, if anybody's interested in, we publish twice a week a report, and you can log in and see all the charts online, as well as downloading a PDF. And you can just go to wavetrack.com. This is Wavetrack International's main page. And if you go products and services, and actually you can go to registration and subscription. Go to subscription, and you'll see here is the Elliott Wave Compass report. It's $39 a month, so it shouldn't kill you. And at the moment we're running our annual reports. Part 1 is already out of this report. It's stock indices, and you can actually go to and find this if you just go to the main page and look at our news alerts, top right here, and click on Stock Index Video Outlook. You'll come to this page, and this gives you a pretty good, concise idea of what's contained in this. It's a PDF report of all the charts, but it's also a 2-hour video inclusive. It costs $48, and I chatter on for about 2 hours, going through about 84 slides. So we're talking about US indices over a slightly longer term outlook for this one. But it's quite good because we look at various different cycles. And if you're interested in other peripheral indices around the world, like Europe or Asia, we have tons of information in here. And if you want to specifically read about some of the content, you can scroll down here. And there's a list of all the things contained in the report down here. You can see there's quite a long list, and that's $48. Yeah. So,
love and respect your work, Peter.
Thanks very much, Dale.
And like you.
Well, so, best of luck with everything. I mean, I tell you, and it's incredible what we've been through over the last year, haven't we? With COVID and everything, and and trying to keep up to date with everything at the same time. Let's hope that everybody's safe and well, and that we still have some ambition to trade successfully, because I think there's some great patterns around, and keep on the right side of the fence. Everybody's going to do well this year too.
My trading warrior brother, Peter Goodburn, check him out. Really one of the best Ellioticians I know, and I know quite a few. So Peter, thank you very much for being with us, my friend, and may you and your loved ones remain untouched by this invisible enemy, and may all your counts not be alternates.
Oh boy!
I just, just
you've been listening into my prayers in the morning. Thanks a lot.
May all your counts not turn into alternates. All right, buddy.
Thanks, Dale. Appreciate it.
It's always great hanging out with you, man. All right, that's a wrap, everyone, and we'll see you for the NFP tomorrow. And actually, I'm going to be interviewing a journalist, Charlie Gasparino from Fox News and the Post, and we could ask this conservative guy what he thought about people, going into the Capitol building and breaking things. So, Peter, thanks very much, and we'll see everyone tomorrow. People are thanking you for your work, Peter.
Adios.
You're appreciated here in F.A.C.E.
Thank you. Goodbye, everybody.
All right. Bye-bye. Oh, yeah, I forgot. Don't just count your pips, count your blessings. Almost forgot. Oh, my God. Okay. See you, Warriors. You're welcome, Gordon. Sinatra, Hugo, Giars. See ya.